welcome. Good morning. And it's a beautiful day. Let's look straight to the economic calendar this week. A lot of activities we have going on this week. And there's no fan payroll this week in FOA. It's always good. Brings a lot of volatility into the market. And there's news by 8:15 and 10 a.m. today. PMI news 8:15 10 a.m. See how that goes. My go-to pair to trade is Euro USD in the morning, and I'll consider trading the indices later in the afternoon. If there's anything good on metals, I'll look at metals as well. If there's nothing, then we'll leave that as it is. Leave that as it is. It's been an eventful week with all the wars going on around the world. Iran, US, Israel. There's a lot to take in. So starting off with DXY, I do have some levels marked out, which I was not expecting that would engage those levels anytime from now. We're on Monday. This was Friday, end of the week. We're in kind of like this mini consolidation. We're in this mini consolidation for a while, and price broke out around the swing lows. What would I have expected? I like how we engaged this high and we failed to close above it. So I'm more interested for price to trade lower. We have an internal range liquidity, bullish fair value gap. I might look for price to come into this, and potentially the high of the week might already be in place, having swept this January high. This is the high of the year. So now we're forming a new high of the year again. We have the yearly low in place, a new high formed. So my retrace with expectation of the news coming in very soon, with expectation of non-farm payroll. We might have a bearish price delivery. I'll take this out. I don't need this. Majorly, I'm trading from swing point to swing point. That's what I'm doing. It's been very, very productive, and just stick to whatever works for you. So this works for me, and I just just stick to that. So simple terms. Euro USD should be doing the same thing as well as pound USD. While we're here on Monday, I was of the opinion that we could engage the swing high before we run lower, but price didn't do that. Price didn't do that, so I was not in any entry on either of the pair. And even yesterday, looking at the 1 hour, this is hourly time frame. I think I mentioned this on Monday. We're below my relevant opening hours that I consider relevant opening hours, and I would only look for buys. However, before I would want to get in on a buy entry, I would want price to take some liquidity, and if that is not done, there is no reason for me to want to consider a reversal or price, so I didn't get any entry function, I didn't get any entry logic. This was just a retracement back into this 1 hour fair value gap. We continue selling lower and all of that even till today. But today, having swept all of this liquidity, I can expect that we would have a retracement or a pullback into the range. And if we're to continue bearish, I would want us to respect this bearish averaging. However, this might be a breakaway gap where price will just range like this for the whole of today. By tomorrow, we'll get a tap into this and would continue lower. So it could be the same thing on DXY. We would have an inside candle today after this massive expansion high. This will form the fair value gap. This will be a breakaway gap. This will be a breakaway gap, and price would just tap into and will continue here. So it all depends on how. I cannot anticipate what price is going to do, and again, I had this range like this earlier, this marking the 50% of the range, and I was looking for a bearish continuation. However, having swept this swing high, I am not too keen on that right now, so I'll take this out. It's not needed anymore. No needed. Yep. Just leave. I prefer my chart to look so light, not too much. Okay, yeah. So this I'll have. Yeah. Since this is still in formation, I'll leave that like that. Possible save. Yep. I think I should take this to my journal right away. That way I know DXY daily chart. Potential infiltrating information. Where the breakaway gap. Indices. Out of all of these indices, German 40 moves during London, so we'll go to German 40. Coming into the week, I ta-da. Comment interval below. So coming into the week, this is a new week. This is the week open, and on Monday, while I was on stream, I was anticipating for this gap to be filled, and this gap was filled on ES, on NQ, on YN. They got filled. This is the same gap. They got filled. Where's my magnet? Yep. And I don't know why German 40 is just decided to do what it wants to do. You can see this gap got completely filled on ES. Mark this out on Monday, traded the New York EM session. I have all of those annotations. We have SMT divergence with ES and NQ at those eyes. NQ running those eyes. ES not. YM filling those eyes. SMT divergence. However, we still got the gap filled. So I was really expecting that we'll have a gap fill. We'll get this gap fill, but unfortunately we did not. And while on Monday, while I was on stream, I had this eye cursor around this AVG, and I wanted this hourly candle to close above with a body candle closure. That way I would know that the price is on my side for a bullish continuation, which we didn't get that. Then we had this closure. We only filled this by a point. I don't think they get filled. Yeah, so we still had like the body candle closure. It was just by very close, very minimal, and that was why I still was not bullish on DAX because of the elements it was portraying. And going into New York, I would not want to trade DAX. It's rubbish during New York. So, but it's a London pair. It's a London indices that is always ideal to trade. So we didn't get a follow through. I'll just take all of this out. We did get a follow through, which is not good, no ideal. We're running some significant swing lows, which I like, and we are rejecting those lows with a body candle closure above. So this is a rejection for me, which would make me to want to consider bullish price delivery on DAX. Which want me to consider bullish price delivery on DAX. And one thing I want to look out for is how are we reacting off this week. If we were supposed to be bullish, I don't want to have a deep retracement into the lower quadrant. You know, just every activity should be above the wick. Every activity should be in this gray box. But now that we're dipping much more lower, I would still be on the sidelines. I would I'll be on the sidelines today and not try to look at anything. Just be on the sideline. Daily open. So we have this. Let's mark it out. $1,900. Midnight should be and one more thing that I like to do is using my time anchors to gauge when I'm supposed to be in a trade or how I should be in a trade. I use my time anchors to gauge that. We're trading in between these two price range. I am always skeptical about that. However, if we're actually below the price, below time, below my relevance hours, I would be looking for longs. And if we're trading above relevant hours and we trade into an higher time frame point of interest, an higher time frame PDRA, maybe a swing guy, maybe an FVG, I would expect a reaction from that higher time frame and I'll be bearish since we are above relevant opening hours. So that has always acted as this filter for me to know how best to engage price. But in this condition like this, I'll be on the sidelines. Good. Monday. Sometimes I'm just blanked out with gold, frankly speaking. Okay, I have a swing guy on my last annotation. I have this bearish imbalance, which we were ranging inside for a while before breaking out, and now we're trading into a bullish FVG on the daily time frame, which is in a discount. You can see it's below the 50% range. It's in a discount. We're getting a reaction off of that, respecting the consequent encroachment of that gap. I'll transpose my time here. Take that. Okay. London is always kind of like choppy for me. You can see these massive consecutive dumps. I was able to I got a trade on gold yesterday. It was actually the trade that I used in passing my first evaluation anyways. And what was I looking at? It was these highs. That was this high I was looking at, which is gold running those highs. Why silver is not? So we have an SMT, not like we have SMT at these highs between gold and silver. And that was from Monday. which was a confirmation that we are going to run price lower. We have a deeper retracement inside this FVG on gold, on silver. 9 was a shallow retracement, which is another SMT fill, shallow retracement. So the very shallow retracement, and coming into New York, London, retracement inside of the FVG. At the time, good. We're having that deeper retracement there. Yeah, it's not present. Very shallow. So silver is always leading. Looking at these eyes. What do I want to do right now? Looking at 1 to 2, 2 to 3. We're making those consecutive eyes. On silver, we had lower, then higher. So that was why. From there, then I went down to the 15 minutes on gold to get an entry at this FVG. Just at the close of London. Also, similar thing that is happening since deeper retracement on gold, fractal retracement on silver. So, gotten after we traded into the FVG, got a bearish closure, entered at the open of the next candle. My stop loss was above this high. It was a very low risk trade for me, and if it was going to get validated, the validation would be very quick, and it just puked down. My take profit was just below the swing low. It happened so fast. And it's been like very long that I took any trade on gold. It's been like forever. Okay, let me just do something first, and I want to try and show something from my FTM account, but I don't know. Yeah, I want to show something, but I don't know how. It's still loading. I'm here. I don't know how I'm going to hide it. That's why. Okay. Details. Good. Yup. Okay. I'm able to expand it. Okay. This is more like the trade report from FTM. was why I got in on the entry. Like I said, it was very very quick trade, 52, 58, and price displaced down, almost tagged me out at the at my take profit. It didn't. Came this up, like it was just few points away. It was like maybe 5, 6, 3 points away. It didn't. Retraced. Came back all the way. Traded past my TP. Due to spread, it didn't tag me out and started retracing all the way back. And at this point, I just went break even. I'm like, okay, whatever this trade is gonna do, let it do. Do your worst. And retraced all the way back, consolidated a bit, then gave that final push and smacked down. And it was one single trade that, you know, I used to pass my fish to. It was that one single trade I used to pass my fish to account. So good, good is good if you can follow the sequence. Like look at this now. This sequence is all from more like the hourly to me. It's a daily sequence anyways, but I'll say it's more like an hourly sequence following the narrative. I have to follow the narrative step by step. Take it down, take it down, take it down. Okay, it's doing this. Okay, what I want to say next is doing this. First, we have divergence with silver at those highs. Okay, I like that. There's a 1 hour FPG. We are reacting into that on silver. Oh, shallow retracement. Okay. After the reaction, we're getting another hourly FPG again on silver, shallow retracement. Okay, I like that. Some form of SMT inside that fair value gap. Okay, I like that. Then I'm going down to 15 minutes to refine my entry to see if I'll get something off of this reaction. And it happened at London close. Very very quick. So I do have a gold protocol that I use, and it's very very simple and straightforward, and it's always for London session, not London, New York, and it has to do with gold leaving previous days, not previous day. It has to do with the London session. London session has to be in range bound going into New York. That's the only one I'd really really like to take good. And it's like this. I'll just delineate the 15-minute time frame, London high and London lows, and I want price to be held in that range until 8 a.m. I want price to be held in that London high and low until 8 a.m. and I'm waiting for one end of those session liquidity to be taken. If it takes London low first, I would target London high. If it takes London high first, then I'll target London lows. It's as simple as that. I'm not. If it's not there, if it's not doing that sequence, I am not going to take a trade on gold. However, during London yesterday, it was the follow through was there on the hourly, So 15 minutes as my time frame. I'm looking at 3 minutes, 2 minutes, 5 minutes for an entry logic, and we run those eyes. We trace down, delineated a range coming back into that breaker block with AVG. I'm looking for price reaction because this was too aggressive for me. I was looking for price reaction. Now we're getting a bearish reaction, entry, 3-hour, 4-hour, 3-hour bridge, and that's it. Silver. Okay. Do we get a closure below this 15 minutes? Let's not forget that we are reacting off a daily bullish fair value gap, so we can expect more bullish upside. However, this can be a minor retracement. There's a 15-minute SMC at those highs. Let's see. So there's a 1-hour SMC at those highs, which is not bad. Silver making higher high here. So we could just get that not too shallow retracement. If price is going to offer that, get a shallow retracement, a retest to run this high, run this lows. No, I'll say to run this lows. Then we get continuation back to the upside. Yeah, I'll look for us to run these lows. Ah, nice. Beautiful. All of this was overnight. There's no way to do anything. All of that was overnight. Delete. Taking some very, very important flows. Favorite low is still intact. Oh, I'm trying to wrap my head around what price wants to do. I'm trying to wrap my head around what price wants to do. Been barcoding, we've been in this range. something a much more longer, wider range. Oh my god. Wow. So now that we've traded to the range low, then we can look for we can anticipate price to get to the midpoint of the range. First, look for price from the range low. We rejected the lower quadrant of the range low. We can expect price to trade to the midpoint of the range, which will be our first stop, and we look for a next stop to the upper quadrant. Price to do something like this, stall here for a while, upward. That's something to look. That's something we can think of. Mass is the range. From the low. From the low to the high. Same thing. We'll look to trade back to the midpoint of that range. Then we go towards the upper quadrant of the range. This is one big giant consolidation. It's a big consolidation. But should we frame something from the lower time frame? We are in the middle of the range, relevant time. In between that, I don't want to do anything. So I would naturally not trade like this, but let's say that we're trying to look for something, hypothetically speaking. I want us to be below the range. Why? Reference to how the daily candle gave us with respect to the daily candle. Just add like 2-3 candle bars. You can see that previous day running some significant liquidity, which is good. Going back to the daily, we're running significant swing low, looking for that rejection, which is good. All of this is hindsight looking terrible. It's not good, doesn't make sense. Do we have any form of SMT at those lows? No, no SMT. So everybody is sweeping this low. No SMT. Just ignore. You want to use structure? How would you define structure right here? Closure above this high, trading back, inside token. I don't think there's anything I want to do. I will call it a wrap. There is nothing I want to do here. There is nothing. I would now stream, going forward, I would stream New York session. Going forward, I will stream New York session. I have more things to say. I am seeing more things. There's more information. Because me going into New York, I would have this. This is swing low. I like it. Which I'll mark out. But I'll just do the marking out now since I'm already here. This is still information. There's a tendency that this high will be taken. I'll delineate this swing high over here. And also this one. Now, going into New York, AM session, whichever level is engaged first will be my area of concentration. I would mark out this fair value gap, which is also an higher time frame level that is important. So it's possible that we do not run the swing lows, that we'll just trade into this inefficiency and we'll use that to attack the highs. That's a scenario. But there is news by 8:15 this morning. There's news by 8:15 and 10 a.m. Let's see what that brings to the market. And I'll probably no engage price until 10 a.m. Just wait. We now have a live account with FTMO. Is it a live account or is it a funded account? It's a funded account. Funded account, we're here to start it. Yep. Still blank. We're here to start it. To start it. It's new, it's fresh. The 100k account. Alright guys, I will call it a wrap. Frankly speaking, I'll just go back, rest, do other things. Thank you for being a part of this trip.